Good morning, it's Harvey Jackson from Producer Profit. Just going to go through some of the news. The USDA was a bit of a yawner. Really no big news there. And we're looking at taking some profits on some long positions. If you have calls, you might want to leave them in. But I would definitely want to be getting out of any March positions altogether if we have any calls or futures. So let's just get into here. So there's a few notes here that Kyle put out yesterday. USDA was a bit of a dud here. Wheat futures can continue to be choppy as winter kill chatter continues to bounce across for Russia and even the U.S. Regions as well. And if you have a basis contract, you may consider just pricing it for now and then looking for an opportunity to get back in. So if you get a little bit of a pull back a little bit, and then we'll maybe buy long futures or use a producer's choice if we haven't delivered it, or a focal point with grain companies, but looking at getting back in if we can. Canola was knocking on the door of 680. We pulled back this morning, but if we're in a long position, that was suggested just I think earlier last week, we'll just get out of it and then look at reversing into a short position. So what that would look like for a setup is for protection, you would put in a stop loss at 690. So if we enter in right where the market is, you would have a little bit of a loss if the market continues to go up, so that you limit your losses if the market does want to get above that 690, of course, and let the market run, because that is a resistant point. And you may want to consider exiting if the market gets down to 640. So you're just taking profit as the market kind of has a little bit of a wave. We'll show it on the chart there a little bit later as well. USD ending stocks. And this is the only slide that I pulled. There's probably lots, but no real numbers changes. But you can see that there's a lower ending stocks on corn, soybeans, and wheat. But some of the feature news is actually the China just buying less because they have bigger crops. But that's another news article that I put in here as well. So Trump is looking at reciprocal trade tariffs, and this is going back to the 1930 trade discrimination law, and maybe this might be a little hard to see, and I might show this more than one time here, but you can see the bar charts here. U.S. actually has tariffs, Mexico, Canada, and our tariffs are pretty well matching the U.S., Canada versus U.S. here. China has tariffs, but even if you were to just match all of these, it would not be 25% on anybody. Like even India is only 17%. So just keep note that I think this reciprocal tariff idea might get talked about more. So if they just put on tariffs to match other tariffs that are already on average, we could see that actually happen, and probably less devastating as all the talk and rhetoric out there in the market as it is right now. But of course, it will add to inflation as well. Like India has some of the highest prices internally in their own country. So this is the article I was talking about, that there's going to be a little wee bit of decrease in Chinese imports because they had a big crop. You can see here they had a good sized crop, and it's going to be substantive. Exports a couple of years ago, U.S. corn exports to China was significant, but that's shifting already, and a lot of it's due to the crop actually being record large. And on top of that, you've got economic issues that are going on in China as well. So Chinese futures have pulled up higher internally, along with the Chicago futures about the same kind of rate. Thanks to Karen Ron's reporting there. Let's just get into the oil seeds. So if we just look at canola is down 310. Rapeseed was basically unchanged. Soybean oil slightly down, really not a big change there. Palm oil is up a little bit again, and crude oil is down just 0.81 of a price per barrel. Soybeans down 6 cents. Wheats are on the plus side, but just barely. And the Canadian dollar is down, and so is corn is just basically flat from yesterday's trade. So we just look at the vegetable oil imports here. You can see that just whose price is kind of, and this came from the USDA as well. So this is an internal document that was within the USDA. But you can see there's a bit of a cluster of pricing there, with the Argentina soy oil kind of lagging, but the Indonesia palm oil and rapeseed are higher, and the Korean sunflower seed is higher. So I would expect to see canola somewhere in the middle here somewhere as well. So here's just using the May chart. This is just a support line again, or a resistance line, and you can see that we got to the traded to that point, and it looks like we're failing as of today. So that's not a good sign, but but you also see that we're getting to be that oversold position, and a reversal could pull us down in value, and that's exactly what we talked about right here in Kyle's report as well. So November canola, we're starting to get to the higher end of the range of I guess you could have drew farther back for full retracement value, but it's still following that support line. Not like the rapeseed where it broke through on the rapeseed price in Canadian dollars minus the front month canola. So currently trading at $114 premium over Canadian canola. And it did get down to the $100 a couple of days ago. I still think this area is maybe the area that I want to see canola differential get to, and that would mean that canola prices might have to go up that little bit as well. Rapeseed still seeming to follow through on the trend line, kind of chopping sideways, but green day nonetheless. Soybean oil seems to be the same nothing burger Yawner Dud that we've seen in the last little bit. You could see maybe there's a little bit of a trend there, but that's a bit of a joke as well. Palm oil, actually, it's been a pretty good move up. I don't know, is this a saucer trade? Maybe it's possible. Like wheat might have a saucer formation as well, but you could almost say that palm oil does as well. Soybeans broke through the trend line. Could look for a little bit of a pullback here, especially with the harvest that's coming along in Brazil, and looks like the weather is conducive for them to harvest as well. So the crude oil looks like a hair. Looks like it's maybe a little bit of recovery, but it's basically starting to consolidate a little bit at this 73 to 72 kind of area. Canadian dollar, another yawner. If you take this this pullback that we had during the trade tariff going on or tariff going off scenario, because that these long candles are basically tariff scares. Let's have a look at wheat. So China, corn imports fall. Their wheat imports are falling as well. So let's just have a look at I thought this was kind of cool to just maybe have a look at relative pricing of FOB export bids. And Canada, because of the quality that we put out, we actually have a fairly strong bid. And you can see it's fairly consistent. The green is well above, or not always above, but most of the time is. And then you can see US is right there as well. Ending stocks, if we're just using the majors, you can see how that wheat ending stocks kind of play out here. You're looking at fairly tight ending stocks with global stocks are going down as well. Here's your spring wheat chart. Looks like we're kind of maybe creating a little bit of a top here. And again, here's our possible saucer formation as well. Spring wheat for new crop. It looks like it's still consolidating here. Still looking at the $7 kind of mark as a value saucer. Hard red wheat consolidating a little bit, but you see that happen often enough on charts here. Chicago, same kind of idea. Milling wheat is maybe going a little bit more sideways, but still pretty nice building of trade here. Need to beat this higher value of the 78.6 retracement value. Corn, a little bit choppy going sideways here. USDA really didn't give us any strong news, but this could be a sell here. Still, when you look at the values, it's not far off. I am leaning to be a sell somewhere in here on corn at some point here. So if you look at second planting corn pace in the Pereira region, it's starting to catch up, and maybe even if you give it a little bit more time, you can actually get out of that 10-year range that you see. It's pretty high. And next reports that are going to be significant are not until March. So look out for the tariff talk here now.